What is going on YouTube? It's Sanking. We are back with another one. You guys know what time it is. It's the weekend. That means I'm coming at you with a couple of plays to pick up next week in the market. But before I get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. Now you guys know I never take my eye off the ball when it comes to these markets, as I'm always trying to get us capturing the best players that are out there to give us the maximum returns in our portfolios. Now it's coming to the end of the month, so I know a lot of you will be topping up your dry powder. You'll be looking at where to deploy that in the markets. Now in this drop, I'm going to help you guys navigate and get ready for that Monday morning opening bell in the stock market. You guys will start to see some of our growth plays starting to show momentum now. That rotation of funds is starting and we're seeing it flow back into our growth plays. That's why some of them are starting to break through. So it's now more than ever that you guys are active in the markets, focused, switched on with me, so we can get you capturing the best plays that are out there. So in this one, I've got jam-packed one for you, so do make sure you stick this one all the way through with me. All right, guys, you know what time is. Let's get ready for the first one. So the first one I've got for you, that's Grow Generation, ticker symbol GRWG. We are kicking things off right with this one. You guys know this is a play I've been trying to get you into over the last couple of weeks for very good reason. This one is backed by the strongest management that is hitting their objectives every single month, and that's exactly what we want to see. What you guys need to know is while we go through this market volatility, that gravitational force that I teach you guys about is pulling these plays down, not allowing them to reach their full potential. So this one, like other growth plays, isn't being allowed to break through that resistance. You guys know this one's got resistance at that $55 mark. You can see it's hit that twice over the last couple of weeks, and support on this one is around that $42, $43 mark. That is why at $45, this one is ready and waiting for you guys to scoop them up next week in the markets. As I say, this is going to be a powerful play moving forward. I call this a monster stock. So as I say, if you guys haven't already got your position in, next week is the time. As you guys can see, I've got my position fully built out in this 100 shares, set and ready to go. So I'm going to put you guys on some extra game now to let you know what kind of things I look out for when I'm looking into these plays, so we can elevate your game. So check out the charts. The support on this one is getting higher. So it was $37 on the 7th of March, $41 on the 28th of March, and then on the 19th of April it was $43. So when you see these rising support, that is a strong indicator when it comes to the technicals that this one is showing some kind of bullish movement. So if you haven't already got your position in Grow Generation, as I say, next week, join us on this play. The next play I've got for you, that's Skills, ticker symbol SKLZ, currently standing $18. Now Skills, they belong to a basket of plays that are quality, hyper growth, but have been very underappreciated by the markets over the last couple of weeks. That's why you've seen this one in free fall up until this week, which was a turning point. We saw the price reversal and some momentum upwards in this play. It's been a rocket since midweek right till close of week. I want to put them on your radar ahead of trading in next week. Guys, that's why it's important to continuously be dollar cost averaging into your plays that are down but not out, because you can't time the market. You don't know exactly when they're going to turn, but as long as you're investing to quality plays, they will turn and continue their rise upwards, just like Skills did. Now, if you guys are able to brush past the noise on plays like Skills that have the quality products, make those real revenues, and have that continual runway of growth ahead of them, you guys are set for many years of cash windfalls from these markets. You guys know I'm here to support you on your journey, help you decipher these markets, and let you guys know where you should be positioned daily. So with Skills, continuously dollar cost average into them if you can catch them in the teens next week. So at $18, again, they're ripe for picking up in the markets. Now, as I say to you guys, dollar cost averaging into these plays, nibble at these plays. When I connect with you guys one-on-one, one of the biggest mistakes that I've seen you guys be making over the last couple of weeks and months in these markets is you're going too heavy on your first investment. Grab a couple of shares here and there, wait a few trading sessions, grab some more. You might be able to get a slightly cheaper price in the next trading sessions or the next couple of trading sessions. That's how you guys properly build out your positions. Now, I'm gonna put you guys on some more game with this play. We've seen some serious momentum in this one since Wednesday, seen that 33% up on the Wednesday, another 10% up on the Friday. The reason why you've seen those moves, guys, is because this one is likely to have some level of resistance at that $19 mark, because that was its previous support on its way down. So it might struggle to break that $19 barrier, and if it does, it will consolidate there. And if it smashes right through the $19, it will be in the clear. So not only do I run the fundamentals on you guys, I do the technicals to help you guys understand the markets the way I do. Let's jump to the next one. The next play I've got for you, that's Roku, ticker symbol ROKU, currently standing 375. This is a streaming play. I only rock with 2 streaming plays. That's Roku and Disney, 2 quality, high-class plays. Now, this one's come down over the last week because they've been wrapped up in the Netflix earnings. We know Netflix had a bit of a slowdown in their last quarter, so the investors are transferring that noise over to the Roku stock price because they're both in the streaming game. But as you guys know, I'm here to cut through the noise and give it to you guys direct exactly what's going on with these plays. So there's a key differentiator between Roku and Netflix, and that is that Roku, they do sports streaming, whereas Netflix don't. So Roku would have benefited from March Madness, NFL, various other sporting events, and that's going to transfer into their earnings, and they should perform strong. So as I say, since that cool off in that stock price, that's just opened up a good entry for you guys to get into this one if you're not already, or load up your existing position. As I say, this is a high-class streaming play that's set to benefit from various different catalysts as you move forward through the year. So I'm going to make sure this one's on your radar ahead of next week. Alright guys, so those are the plays I want to run by you, give you the strategy ahead of Monday morning's opening bell in the stock market, so you guys are able to navigate these markets, deploy that dry powder effectively and correctly. Now, as I say, now is go time because economic indicators are looking good. Vaccine rollout is being successful. We're starting to see that rotation of funds back into our growth plays. We're seeing some momentum in the portfolio. So, as I say, these plays won't remain at this price forever. So you guys need to be switched on, focused with me, and be out there active in the markets next week. Let's talk about how we can level up as investors. So I'm talking to you guys about FANG stocks. Now, from time to time, I like to diversify the content, give you guys different plays from the growth plays. Right now, it's earnings season for the large caps. Earnings season is showcasing the brilliance for a lot of plays that are out there in the markets, and I don't want you guys missing out on that action as well. So I'm going to give you guys a FANG play to add to the portfolios next week, and that is Google. Google is a play that has continual years of runway left in them. Now, Google's that kind of play you can invest into and just let them sit. You don't need to babysit them. This is because they're masters at their craft already. Our growth plays, they need to be you guys need to be a bit more active, a bit more switched on when it comes to them ensuring that they're hitting their business objectives month after month, checking in with me to ensure that those plays are remaining in the portfolios. As I say, with a Google, just let it sit, let it run. So for my investors, those who are serious about building wealth in these markets, grab yourself some Google. Google, again, is going to act as a cornerstone for your portfolio. Call it a stabilization play. You can think of it as the glue within your portfolio. So it's just another play I'm going to bring to your attention as we aim to crush next week in these markets. So if you've been rocking with the channel, you know what time it is. Now this question comes from Frank, says, how do you put your buy limit order at the same time as your stop loss? For example, I was in CLNE and the stop loss went off at 10.90. If I had my buy order at 10.90, I would buy in again. But what if it keeps on dropping till $9, for example? Then I bought in again and holding the bag, or am I missing something? Alright, so let's dive into this one now. This is following on what I taught you guys yesterday about a combination of using your stop loss as well as your limit buy to always prevent you guys from holding any bags in any of these plays, and it's simple to do so. So let me just run through the mechanics on that with clean energy fuels. Now if we just backtrack to around March, you can see support on this one was around that $11 mark. Now, we were holding this play as they were in the 15s and the 14s. They had the Amazon announcement spike up in that stock price. The very next day, that stock price came down and broke support at $11. You guys know I say we set our stop limits on these plays at support or just below support. So in case they break through support, you can cash us out of the play. And it's unlikely if a play breaks through support, it's then going to bounce through that very same support and move upwards, because that support then becomes its new resistance. So it's likely to consolidate for a while or go down for a bit. So as I say, using this combination of your stop loss and your limit buys means that you guys won't be holding any bags on any of these plays. That's why I'm getting you guys to level up as investors and play the market smart. So the key thing here is, for clarification, you don't set your stop loss and your limit buy at the same time. So when Clean Energy Fuels broke through support, as you can see, broke through that $11 mark, came down to $9, now it's trading at $10.40, your limit buy would then be set after the play triggers your stop loss. So when that stop loss kicked in and you were kicked out of the play, at that point in time, you then set your limit buy at that support, which is its new resistance line. So this is a buy in strength maneuver that we do in the market. So when there's that momentum in that stock price in clean energy fuels, which I'm expecting there will be, it can get you back in the game once it crosses over that $11 mark. So that's how you use the stop loss and the limit buy to help you guys. That way you're never holding any bags and you can get into these plays and be immediately back into the green. So that wraps things up. Now on your way out, do drop me down some comments and some questions. It's always good to hear from you guys. And if you're new, join the movement by hitting that subscribe. Now, as you progress to the rest of the weekend, you guys know I'm packing the heat to ensure you guys are prepped and ready to crush another week in the markets with me. So I'll catch you on the next one.